Yeah, good morning, Cheryl. See, I think the bank Nifty has got impacted, by a lot of external factors. Specifically, yesterday we saw a sell-off in the Adani Group stocks. So I think you saw a lot of PSU stocks getting hammered. I think on fears that there could be some sort of concern for them. But I think this is a sentimental kind of impact. Our sense is that with a credit growth of almost 9 to 10%. I would not be surprised that PSU banks which have been hammered down could be good positional bets, specifically banks like State Bank of India, Bank of Baroda, Canara Bank. I think even in the private sector banks, there's been a very limited kind of action, specifically from banks like ICICI Bank or IndusInd Bank. I would believe that if the any investor has a 6 to 12 month kind of time horizon, it could definitely give a very decent kind of risk reward. And as far as the bank Nifty is concerned, in the very near term, the trend would be negative because a lot of negative news flows have been floating around Adani Group stocks. Today there was some negative report for Vedanta. So I think the markets are little concerned that wherever these companies have borrowed a lot of funds from both private and PSU banks, there could be some negative ramifications. But I think definitely Bank Nifty could bounce back maybe a little later, but at least for the next couple of days or maybe a week or so, the Bank Nifty could possibly try to consolidate at the current odd levels, and maybe after that there could be a kind of a good bounce. So we are positive on banks, especially the PSU and the private sector bank, but keeping a time frame of at least 6 to 12 months ahead. No, I think my guess is I think they should hold on for the longer term because I think of late, company has made some announcement that there could be a split in the stock price. So I think that is again another sentimentally, positive factor for the stock. Plus, we believe that FY24 and 25 are going to be very strong years. Maruti already has a very strong order book, and it's all about execution. I believe the passenger car market is highly underpenetrated, and I think we could see very strong numbers over the next, say, 12 to 18 months. So I think, despite the fact that they are making a decent gain, I would believe that, if the investor can put in at least 12 to 15 months more and hang on, that would be a better strategy as the risk reward would get better going forward. So I think it's a good decision if they can hold on. I would believe a better risk reward could be offered around in the next 12 to 15 months. I think at least a target price of around 11,000 plus is very much possible. So I think BSE has announced a buyback, and I think most importantly, I think looking at the buoyancy in the capital market plus the growth in the derivative segment, I think if they can hold on for the next 6 to 12 months, we could see better upside. In fact, over the next 12 months, we hope that NSE also will get listed, and that also will add a little more vibrancy to the BSE stock because technically, the NSE share cannot get listed on the National Stock Exchange. So typically, that is also an event which will play out. And plus, they have a very thriving mutual fund, kind of business, which is the star, the mutual fund platform which they run. So I think there are some reports that there could be some value unlocking coming in from that, piece also. So I think it's better to hold. You could expect a further upside after a very long period of underperformance. The stock has now started moving up. So it's better to hold for the next 12 to 15 months. Rajesh Exports, according to me, has not, rewarded shareholders in any significant manner. And I think they are largely in a kind of a trading business. They operate on EBITDA margins of just about 1%. And my sense is that, they have now started diversifying into a lot of unrelated businesses like lithium batteries, for which, they have taken a lot of PLI kind of incentives. My sense is that, if the investor wants a decent risk reward, and I think there are many other bets from the capital goods sector, from the automotive sector, where I think the risk reward could be better. So I think a shift to, let's say, Mahindra and Mahindra, or maybe from the capital goods says Cummins, could be a better bet. And which was the other stock you mentioned, Cheryl?
The other stock. He's been holding on to Mphasis since June last year. So he wants to know what should he do with his holding right now.
I think Mphasis is a quality play. I think has a very long association with HP, and I think they have progressively, of course, reduced their dependence on HP. My sense is that looking at the kind of headwinds in the IT space, the stock could underperform for the next, say, 1 or 2 quarters. But longer term, I think it definitely appears to be quite attractive. So I think if the investor has a 12 to 18 month kind of time frame, he should hold on. Good value could come in provided he takes a longer term kind of time frame. I think as far as the order book is concerned, the execution is concerned, I think numbers are going to get better in FY24. I think the India corporate capex story is extremely strong. And with more and more execution happening, I would not be surprised that FY24 should be a lot better than the previous year. I believe this is a good opportunity to accumulate, considering the fact that a large part of Cummins exports are to its subsidiaries abroad. So I think the export market is also doing well. So I think, if the investor has a 12 to 18 month time frame, definitely Cummins should be in her portfolio. Obviously, any decline should be used to add positions. Both Nazara as well as United Spirits, I think both are good long-term bets. I think Nazara is a very well-known player in the gaming segment, and probably, I think now things have improved. The company is gunning for very strong growth over the next 2 years. So I think Nazara Technologies should be held on. I think my sense is that this is one play where possibly it's a fintech company which is operating in a very niche segment. So I would suggest that here I think the investor can take a 12 to 15 month horizon and hold on. I think, see, Indian hotels and Oriental hotels, first of all, cannot be compared to each other. Indian hotels is one of the largest hotel companies in India. And I think, with the G20 summit till November, the World Cup happening in October, I think you're going to see a lot of traction in the larger hotel companies. My sense is that even Oriental hotels, is a Taj, managed property. Definitely is doing well, but in terms of the scalability and in terms of the profitability potential, Indian hotels is a much significantly large player. So I don't think one should switch Indian hotels for Oriental hotels. Although the stock price has risen significantly, we believe that over the next, say, 12 to 18 months, we could see higher levels going ahead for Indian hotels. So I think continue to hold with Indian hotels. If at all, you can buy separately Oriental hotels for a additional hotel play in your portfolio. I think, see, the company has been doing very well in terms of numbers, but I think the valuations have become a tad little expensive. And I think ultimately, most of the pipe manufacturers are B2B businesses, which are commodity driven kind of businesses. So I think, valuations have definitely taken off quite significantly. So I think, if the investor wants to buy fresh, then I think he should wait for some more time. I would believe that, if the stock is available at a reasonable good price, entry price, then only I think one could make a lot of money here. But at the current levels, I think it's a hold. Fresh buying is definitely not advisable. I think as far as Borosil Renewable is concerned, I think he should take a long-term view. See, I think they are into, definitely green energy kind of equipment. And I think the company has recently gone in for a massive expansion. So you're going to see a lot of throughput coming in out in the next couple of years. You need to have a little bit of patience here because the stock has, risen from very low levels. So I think, if the investor has at least a 12 to 18 month kind of time horizon, he should definitely look at, averaging more or maybe looking at a slightly longer term view because the business fundamentals are strong. The product which the company makes is an import substitute, and there's a ample amount of demand which is going to come in over the next couple of years. Yeah, I think, Cheryl, you can definitely hold on to Schaeffler. See, this is a MNC company which is into the bearing market. And I think in India, there are very few companies which have the technology and the reach which Schaeffler has got. If he has a 2 to 3 year kind of time horizon, definitely looking at the buoyancy in the automotive sector and plus the industrial sector where Schaeffler, supplies its bearings, I think definitely this could be a good portfolio pick for him. Keep a long-term view, and I think a lot of wealth creation can happen even from the current levels. In India, I think, whatever profit the investor is making, I think he should book out and take the profits off the table. This is a company which is consistently losing customers, which is making losses every quarter. I would suggest that, in the telecom space, this is the weakest player, and I think if he's made some decent money here, book the profits and reinvest it in some good quality name, that would be a better strategy.